So if you see, CASA ratio has two parts to it, the term deposit part and the CASA part. And you can see a healthy growth in our term deposit side. And that's reflective of the overall market sentiment, right? In higher interest rate periods, people tend to move their deposits to term deposits. So partly some of the deterioration in CASA is arising out of that. And other part is, again, the trend that we have seen on our base, which is we have, the mass affluent and above, we have and on the private banking side, we have a relatively higher share of that business in our book. And therefore, movement of money from CASA into more higher interest bearing products has happened. Our belief is that there are 2 or 3 things that we can do better, which we are putting into motion. On the SA side, our CA growth is reasonable. On the SA side, we think government business is something that we have not had in the past, and we just got licensed to do that business last year. That business is just being put in place. That should add to our CASA growth, SA growth going forward. And also the fact that there'll be some, whatever money had to flow out has flown out, and therefore now we can continue to grow from here. The good thing we have seen is the granular part of SA has grown even during the last year. What has not grown is the upper end, high end, large value SA.
Could you share how do you define granular when it comes to SA?
When I say granular, I mean the people with balances below 10 lakh rupees. Yeah.
So quickly, okay, let me just answer the second one since he asked an interesting point really. So, on one hand, you have opportunity, and opportunity like we talked about, A is the opportunity for growth, which is anywhere, let's say, between your 15% to 20-odd%. You're looking at delinquency metrics, which are all pretty good at this point of time. You're looking at spread metrics, which are all looking pretty good. So the opportunity looks very, very interesting. But at times, you really have to, look at the rear view mirror and say, hey, there is a baggage of history which you have to keep, worrying about at all points of time. And normally what happens is a lot of the mistakes you really make are in good times. And unless you are careful during good times, because the damages of what you do really in good times, you will get to know in a financial service business only after 2 or 3 years. And that's why the care.
So just a quick follow-on. At a systemic level, are you seeing some of those mistakes being made
at this point of time? At this point of time, doesn't seem so. Yeah, it doesn't seem so.